financial system is at a turning point. On one side, Washington is embracing cryptocurrencies more openly than ever, with Bitcoin and Ethereum surging to record highs on the back of regulatory reforms and Federal Reserve policies. On the other, Beijing is carefully preparing its own entry into the digital currency battlefield, this time through yen-backed stablecoins. Bitcoin, the world's largest cryptocurrency, trading in the $113,000 range, having eased off its recent peak but holding relatively firm amid market fluctuations. Its stability is being driven by expectations of United States rate cuts and US President Donald Trump's push to make America the most crypto-friendly nation.
If crypto is going to define the future, I want to be mined, minted, and made in the USA. It's going to be. It's not going to be made anywhere else. And if Bitcoin is going to the moon, as we say, it's going to the moon, I want America to be the nation that leads the way. And that's what's going to happen.
With regulatory wins, including allowing crypto assets in 401k retirement accounts, the US is setting the stage for digital assets to become mainstream. This signals Washington's intent to cement leadership in a space once seen as too risky, creating a fertile ground for institutional adoption. But across the Pacific, Beijing has its eyes on a bigger prize, using stablecoins pegged to the yuan to break the dollar's near monopoly in digital finance. Stablecoins today are largely tied to the US dollar, underpinning billions in daily crypto transactions. By launching its own yuan-backed stablecoins, China hopes to internationalize its currency, embedding it directly into cross-border trade and global financial flows. For Beijing, this is both economic and geopolitical. With nearly 60% of global reserves denominated in dollars, US sanctions have given Washington outsized leverage against rivals like Russia and Iran. Yuan-based stablecoins could offer countries an alternative, a way to conduct trade, settle energy deals, and move money beyond the reach of US oversight. For Belt and Road partners in Asia, Africa, and the Middle East, this could be an attractive proposition. Yet, the risks for China are immense. Since banning crypto trading and mining in 2021, Beijing has tightly controlled digital finance while piloting its central bank digital currency, the digital yuan. Introducing yuan-backed stablecoins would mean loosening that grip, blending state control with market-driven innovation. It would also test global trust. Can the yuan, which still accounts for less than 5% of foreign reserves, command enough confidence to rival the dollar in digital form? Domestically, regulators will need to walk a fine line. Too much embrace of stablecoins could fuel speculative activity, undermining financial stability. Too little, and the experiment could stall. Analysts expect China to begin with small, tightly managed pilots, linking stablecoins to trade settlements or remittances before expanding globally. The United States, meanwhile, is moving in the opposite direction. By integrating crypto into retirement accounts, ETFs, and mainstream finance, Washington is effectively institutionalizing the digital asset class. President Trump's embrace of the sector, along with a more permissive regulatory climate, signals an aggressive bid to dominate the next era of finance.
This is a new golden age for Bitcoin. And I think when you look at what's happening in the Beltway under Trump, you're going to have a deregulatory environment, which is a huge positive. And also, this is brought part of a risk-on environment that we're seeing not just for tech stocks, but for Bitcoin, still in the early days of playing out.
The clash is clear. While the US is betting on Bitcoin and crypto liberalization to extend dollar power into the digital age, China is betting on yuan-backed stablecoins to chip away at that dominance. What's at stake is not just crypto markets, but the future architecture of global finance. If successful, China's move could accelerate de-dollarization, provide US rivals with a financial lifeline, and cement Beijing as a digital innovator. But if trust and adoption falter, yuan stablecoins could remain a symbolic gesture rather than a transformative force. The currency wars of the 21st century will not be fought only with interest rates and trade balances. They will be fought on blockchains, in digital wallets, and across the coded architecture of global markets. Both Washington and Beijing know this, and both are racing to shape the money of the future. With Debangana Dotto, Bureau Report, India Today Global.